the Retirement Readiness Podcast with Tim Regan and Kaitlyn Hedger, presented by PrairieView Wealth and Tax Advisors. Live your 2-comma life.
Hi, and welcome to this episode of the Kickstart program, part of the Retirement Readiness Podcast. With me, as usual, is Kaitlyn Hedger, our head of the Kickstart program, and I'm Tim Regan, your host. So, Kaitlyn, today we are talking about taxes. Yay! Yeah. And so, is it talking about how do you pay your taxes? Is it talking about how do taxes, I guess, correspond with the Kickstart program?
Part of it is, when you go to your tax accountant, you're bringing them your things that you did in the previous year. You're talking about how much you made. You're bringing them your account statements, all that good stuff. And what they do is they're going to take a look back at what you did that past year and file it for you. They might have some recommendations for you, but essentially they don't know you as well as I'm going to get to know you, or, a financial advisor could. And so where we come in and where tax planning comes into your financial plan is we're going to be tax efficient now, knowing what your goals are 50 years down the road, and being really intentional with just how that all shakes out. And
so, are you kind of like my accountant now? Do you just look at things come like after January 1st and tell me, hey, here's what already happened and now here's your tax you owe, or is anything different from that?
It has to take place before then, because otherwise, if you wait until January 1st, you might miss the boat for some tax credits or benefits that we could be taking advantage of in the actual tax filing year.
Sure.
Things like contributing to a Roth IRA, or if we increase your 401k contribution, all of those things have a play on how much taxes you're going to owe come tax time.
And so when I think about paying taxes, like, should I be focused just on like this year, how much I pay in tax, or how does that play? Because it seems to me like if I want to save the most that I can, I just always put as much as I can in the 401k and try to save as much on tax as possible. But is that the right answer always, or?
It's not. And I think that's where, a lot of people get confused, and why being goal oriented with your planning is so important. Contributing a ton to your employer sponsored plan is fantastic. But what if you're planning to buy a house? And now all your funds are tied up in something that you could potentially be penalized for touching before you turn 60, So it's, how do we make sure that we're being tax efficient while also still keeping in mind some of the goals that we have in mind? Because there's taxes that play in when you buy a house too, especially if it's your first house. So it's walking through what all of that looks like and what we should be doing now, not necessarily waiting when we pay our taxes.
And like, if I'm putting money into my employer sponsored plan, is it always the right answer to put it in tax deferred to where I'll pay tax on it later on? So I save tax today but I have to pay it like later on, or do I ever want to choose like a Roth option, or what do I do with that?
All depends on goals. A lot of times it's great to put money into those pre-tax vehicles like your traditional 401k, but sometimes when the time's right, it makes sense to put it into a Roth where you won't pay tax on it when you take the funds out. It all depends on you. It's unique to you.
And so what are some of the things that I look at in order to make those determinations? Or like when I say, what do you guys look at as part of this Kickstart program to decide, should I go to a Roth or should I put it all into like tax deferred?
It depends on what you have available to you, of course. B, it also has to do with, where are you at from an income perspective and what tax bracket you might be in? Where are we trying to save tax wise, and what are we trying to save for?
And so when I think about it, I think like a lot of times people always just say, throw in the 401k, make it tax deferred, but really that's probably the wrong answer in a lot of the cases, especially in this Kickstart program, if I'm thinking about that correctly.
Yeah, it could be, and I think the biggest thing is just putting money away, period. Get it in there. And then, let's assess how we can be more strategic with it from a tax perspective.
Okay. And then help me to understand a little bit. So, like my accountant, if I think about an accountant, the accountant is always always looking out the rear view window. Mm-hmm. My accountant has never asked me what my goals are. I've never gotten a call in like October that says, hey, we should do this now to protect you. Like, is the concept then that we're more proactive inside of the Kickstart program, or is it kind of that similar model?
It definitely is. And to give you an example, college saving. you've got young kids that you want to start saving for college. Do you go into a 529 plan that could potentially have some state tax savings? Which plan do you decide on? Or do you go a different route? It depends on, where do you think your kids are going to go? How you and your spouse have decided, how much you're contributing to that. But there's tax concepts in there that probably need to be discussed when you're deciding on what to do.
And so as part of the Kickstart program, like do we do tax returns first of all at our firm? The answer is yes, right? Mm-hmm. And so part of the Kickstart program is we'll look at that, and if appropriate, we can also file your taxes, not just give you the tax advice. Tax advice is what's included in the Kickstart mm-hmm. program, but ultimately we could also actually file your tax return if that makes sense too. Is that
absolutely, especially if you haven't necessarily gained a relationship with someone that knows your goals? Let us be that guide for you. And we can even be a partner with you after the Kickstart program ends. It's not just this one and done engagement with us. We want to kind of walk alongside you as long as you'll let us.
Yeah. And so it's put together my goals, put together a budget, make sure that I've got investments aligned in the right way, look at how all of that plays into the taxes that I'm going to pay both now and into the future, mm-hmm. try to be proactive in minimizing as much as I can with some tax. And then you throw in a little bit of estate planning on top of it. Yep. And you kind of got the whole Kickstart program all in one, right? After you look at some of your group benefits and stuff at work.
And the tax conversation might be a short one. You might be doing all the right things, but let's at least make sure that there's no rock left unturned and that we're really assessing the whole scenario.
Well, and probably something that needs to be done every year, right? Mm-hmm. As salaries go up and bonuses are paid or whatever. Yep.
Constantly.
Yeah. Or as even now we just saw some major tax legislation that was just pushed through. So tax law changes as well as your personal circumstances change.
Sure did. And so just keeping up with the times, what's going on, should we be making changes?
Awesome. So for more information, head to pv-wp.com and look for other episodes regarding the Kickstart program there. Thanks, Kaitlyn.
Thanks.
Be well.
The Retirement Readiness Podcast with Tim Regan and Kaitlyn Hedger. Presented by PrairieView Wealth and Tax Advisors. Live your 2 life. Learn more at pv-wp.com. And while you're at it, don't forget to like and subscribe to the Retirement Readiness Podcast on your preferred podcast platform.